Welcome to another episode of the Growth Game Podcast. I'm your host, Paul DeLuca. We are live from the SIA in beautiful Austin, Texas, and we are starting our very first interview of the week, and we get to be able to be with Tom Sena. Tom, thank you so much for coming on the show. I really appreciate it.
Thanks, Paul. You're giving me a nice break from preparing tax returns.
There you go.
Excuse.
I love it. I tax returns, stop. This is the time of the year. Get out in the middle, right at the end of March and come out and do something fun. Tom Sena from UHY. Thank you so much for being with us, Tom.
Thanks for having me.
Really appreciate it. Well, so Tom, this podcast is all about mimicking growth. My audience in the staffing industry loves to be able to find tidbits of different things that they can do to either fine-tune their business or to grow their business. And so we love having conversations with multiple different vendors and people that are in the business to be able to talk about those things that people can mimic. But before we get into that, we're all about people here. So I'd love to get to know you just and figure out how you got into this business, who you are, and what makes you tech. So tell me a little bit about yourself, Tom.
No, you got it. So I majored in accounting and finance a long time ago. Right after school, I worked in banking for a little bit. I wasn't really sure what I wanted to do, right? Like I knew I wanted to do something in business. I knew I wanted to maybe do something in entrepreneurship. I moved down to Florida with a few buddies to open a bar once upon a time.
Fun. I like it.
That did not go so well.
Well, it was an education, right? Come on.
Sure.
Yeah.
Sure. No, it was
Yeah.
great.
I love it.
A lot of research.
I love it. Yeah.
But yeah, no, I cut my teeth in a public accounting firm down there in Fort Lauderdale. Worked there for 3.5 years. Learned a lot about what it is to be a tax advisor and all the good things like that. I still had that entrepreneurial itch a little bit. I left after that to work at a car wash, focused on employing individuals with autism.
Ah,
Yeah.
beautiful.
Yeah, no, it was awesome. And my close buddy and family friends built that business and was looking for help scaling it. So I joined as a CFO and all things that come along with being a startup employee, and help build that from 1 to 3 stores, 100 employees. And loved it there. A wonderful experience. My wife, my girlfriend at the time, now wife, said, hey, if you want to do this thing, we got to move back to New York, be close to family and friends. So that was an opportunity then to, reset and think about, hey, what do I want to do with my career? What should I be doing? And it was right around the time that tax legislation was changing. So I went back to my foundation. I joined UHY 8 years ago. And got back into the client work that I love. A lot of tax planning, a lot of tax structuring, a lot of, compliance and learning about a lot of different businesses. So yeah, that's how I landed at UHY, and we have a national staffing practice that is headed up by Jerry Grady. He's been doing this for 20 years. So just by virtue of joining UHY again, I got ingrained into the staffing industry by the clients I was working with.
So that's exactly how it started. But this is so super interesting because I know a lot of CPAs and tax advisors and a lot of investment bankers, but you may be the first person who went to school to become an accountant and is in accounting who actually went and opened a bar. So that is really super interesting and fun.
Well, we didn't actually open it.
All right. You're going to open it. Okay.
All right. It'd be the smartest investment.
But I really like the fact that you had the opportunity to work in a business. I think, how has that shaped, now that you're an advisor, how has that shaped your career or the way you think about advising or interacting with clients since you were on the other side? You were a CFO. You were in a small startup. You saw that. You didn't just immediately go into public accounting and stay there. Has that changed the way you advise and the way you interact?
100%. Right. So I think you said it right. It's like, I think having the perspective of being on the other side of the table makes it so much easier to, know and maybe think what the client's thinking. Right. So having that perspective has been huge. I think you're a lot more relatable to the things that the clients are thinking. What are their pain points? What are their issues? It's not just, hey, I got to get this compliance thing done, taxes or an audit or a review, right? Which is, unfortunately in my industry, the singular focus of a lot of folks, right? But also, hey, look, there's a lot of operational demands as well. There's a lot of strategy that goes into it. There's a lot of worries of like, hey, am I going to make payroll, this week, right? So I think just having an appreciation for, being in their shoes and knowing what makes them tick, and it helps you be a better advisor, right? So having the perspective has been wonderful.
Let's talk about a specific, if you don't mind. If you were to pick something, maybe in the last 3 months, that somebody came to you with that was a challenge. It was something different, maybe a little unique. Can you think of something that stands out that was like, I got to actually help this person with, something a little bit more unique? Is there anything that stands out?
In the last 3 months, so we one of our clients that we were working with, she's working through a transition plan and succession plan, right? And she's trying to think about ways that she can incentivize some key folks and some family members that are in the industry or that are in her business, outside of just regular payroll and bonuses and traditional compensation, right? So the ask was, hey, I don't want these people to go through what I had to go through way back when. I don't want this to be a very capital intensive process for them. I don't want them to have a huge tax hit right along the way. What are some ways that I can really motivate them and incentivize them that makes sense from a tax perspective, right?
I like that.
And
so combining the succession planning with tax efficiency and motivation. I think that's a piece that would be different and unique. I don't like, how do you motivate and keep them into it? And how does that tie into the actual planning? That's an interesting thing.
Yeah, no. So, I mean, we had gone through a number of different options that, hey, look, we think this could work. And what we're settling on now and working through with her is something called the profits interest plan. So what this allows for is for no capital up front. It allows for no tax hit on day one. And it really allows for and motivates the employees and the family members to participate in the upside of the growth of the business in a meaningful way. So it kind of checks all those boxes that she was looking for. We're looking at a nice vesting schedule to make sure that, hey, look, there's real sweat equity involved, and that, the people that are not, family members are going to be in the business for a little bit, right? But that, hey, look, like we're shifting from just an employee to an owner as well, right? And the hope is that from the motivation that hey, you're going to think like an owner and take a meaningful part in the growth.
Right. So you're going to motivate them. They're going to hopefully start to think about it and look at it as an owner. And then you're also structuring it in such a way where it's not just a employee compensation, right? Like you're actually structuring it so it can be a capital gain. Okay. So.
Yeah, no, 100%. So, I mean, normally employee compensation is ordinary income, right? Yeah. Different tax rates. This profits interest plan is a little bit more tax favorable. Beautiful. At the end of the day.
I like it. Yeah. Nice. That's a good structure. I like. Tell me a little bit. You mentioned that about 70% of your practice is in staffing, but what kind of size of companies? Like if you had a range for my audience and they're thinking, well, do I need an outside tax advisor that's just going to help me with planning? Do I start at a small business? Like I think that's what a lot of people struggle with is they usually just kind of fall into whatever accounting practice or tax that person prep that they had maybe personally, and maybe they're not an expert. So at what size does it make sense to be able to say, listen, I need an expert to really help me?
So, I mean, primarily we're focused on the lower middle market, right? So a lot of our clients are ranging from 10 million revenue to 100 million revenue is probably our sweet spot. That is the archetype of client that we are picking up, right? Because it's a value proposition, right? There's trade-offs with, maybe an increased compliance cost and advisor that's helping, with that, as opposed to somebody that they're starting out with when they first, are starting, right? Lower cost, but you get what you pay for a lot of times, right? So I would say the biggest issue that we see in staffing is multi-state tax issues. So when clients are getting to the size where they're getting clients that are demanding jobs, in other states other than.
So from a revenue perspective or from an employee living perspective?
That's a great question.
Both. Okay, both. Okay. Both. That was a softball question, by the way, because I knew it was going to be a both. But so really, if I'm a staffing owner and I have employees in multi-states, or I have an on-site that's starting to pull me with my revenue out of state, I should be calling an expert.
I think so.
Okay.
Yeah.
That's a different, and that may happen at 2 to 5 million. But if I'm 2 to 5 million in revenue and I have that complexity coming up, it would be your opinion, let's get an expert engaged now.
Yeah, no, because I mean, those issues compound over time, right? So you want to make sure that you're thinking about the right things on day one and that you're being advised on day one, right? To go back and fix that mess later on, it becomes challenging. Sometimes there's penalties, there's interest. It's a big headache. And if it doesn't, become a problem in your ongoing operations, it'll certainly become a problem, on an eventual sale or transaction event, right? Things come up during diligence that can affect the purchase price and all that. So, yeah, no, I think that's absolutely something where owners early on should get an understanding of, hey, what does my tax footprint look like? Yep. What are some of the nexus issues that are available? And it's not just income tax, right? There's payroll taxes, there's sales taxes, there's gross receipts taxes. There's a tax for anything that you could probably think of, depending on where you're operating. So
yeah, too bad it makes my head spin. I'll let you deal with all of that complexity.
That's right.
So I appreciate this very much. I have one last question for you. You are obviously seeing companies that are growing. You're seeing companies that are flatlining. You see your companies that are declining. That's part of the reality. If you picked some of the things that you see that are identifying marks that staffing agencies are doing that are going the right direction, they're growing, they're having some success, are there any things that you've seen that you're like, wow, there's a pattern across multiple of my clients that are having success? Is there something that they're doing that's working in this economy?
I think paying attention to their data, right? So having really good reporting, having really good KPI metrics, having good dashboards to help inform some of these strategic decisions are really the difference between the companies that are, either doing the status quo and are really growing, right? You have to know where, what areas or what business lines are, you're getting good margin in. You have to know what's performing, who your good customers are, what recruiters are generating the most, revenue for you, right? So having good, a good handle on the benchmarks, having a good sense of like what the standard in the industry is and where you're kind of falling so that you can kind of dictate some of those pricing. I think that's a really big differentiator, right? And that helps, drive a lot of these other decisions, right? You can model everything, project everything, and then kind of go after certain markets where, hey, look, this makes sense. This is like the right moneymaker, right? So I think that's a huge.
I like that. I think that's a great answer, and I think it's really it makes sense. You have to have the data to be able to action it right away. Yeah. And gone is the time where you can just have a knee-jerk reaction and run a business in the staffing industry from gut feeling. That's not going to work.
Be cash in, cash out.
Right.
Exactly. You have to be looking at the right things and you have to be strategic about it.
And be very strategic. And those are the ones that are growing. Well, that's excellent. Well, listen, this has been a great conversation. I now know who to come to when I have multi-state issues. And I appreciate the time that we were able to be together today.
Thanks
Tom.
so much, Paul.
Thanks so much for joining me here on the Growth Game. Appreciate it. Well, that's a wrap from Austin, Texas. Another Growth Game episode. See you soon.